Good morning. Good morning, ladies and gentlemen. Hey, Zorro, how are you? Good to see you guys. How we doing today? Feeling good, trading well, excited about everything going on? Man, did you guys see that news this morning? You're dry? Thank goodness. I'm still waiting to hear from my brother. So, fingers crossed, optimistic. Hey, Abe, nice to see you. Erla, always great to have you. Good stuff, guys. That news was crazy, and I think one of the coolest things is that even in all that nonsense, Ron mentioned fibs still hold. Even in rowdy news, the fibs hold true. You missed a 40 tick run. Teach you not to get a bagel. I can't do that. Bagels are delicious. Bagels are delicious, and I can't have them anymore, so I have to live vicariously through you. If you got caught by surprise, if you got caught by surprise, guys, you need to do what we do every morning. Go to forexfactory.com/calendar. This is not necessarily an endorsement of Forex Factory. It just happens to be the one that I've always used. And it lets you know when there's going to be high impact, medium impact news releases. And one of the greatest things you can do for your trading is not trade into it, because it may bounce, jump, spike. Man, I was watching the NASDAQ when it happened, and everything said the market was probably going to go up, and it did for about a half a second, and then it dropped like a ton of bricks. And because I knew about this high impact news, guys, I didn't get caught out in it. I didn't get run over. And that's kind of a good feeling. Not giving money away always feels good. It can give you whiplash for sure. I'll tell you what, though, it did exactly what we expected it to do, even during news. It's just a little too fast to handle. Today we're going to do something crazy, guys. We are going to talk about a high probability trend trade, and I want to show you the definition right here in the education page, trading guide. I see some new names in here. If you are new with me, welcome. Oh my gosh, it's so great to have you. I love new people because this stuff is exciting. It really is. But there's one thing that I want to share with you. This, ladies and gentlemen, is exactly what it feels like on your first couple days, and I don't want you to let that discourage you. Guys, there's a lot of information coming at you. One of the things that I do, and one of the things I think I'm pretty good at, is I'm going to try and simplify it a lot. And what I need is for you to get on board with allowing things to be simple. We're going to keep it very focused in the first hour. We're going to keep it very focused in the first hour of every day. Sorry if that scrolling has given anybody a seizure. Where is my definition? What we look at every morning for a whole hour, guys, and I mean literally for an hour, sometimes more, is what we call a high probability trade. This is your foundation. This is your introduction. This is the first step in the process, guys. This high probability trade is defined when each indicator on every chart lines up with the rules for the trade. Typically, this is when triggers are their strongest. There's no terminations, and there's no trouble spots between your entry and your target. And guys, I'm telling you right now, these are the trades that build confidence, and these are the trades that this high probability trade, if you back tested it like it's been back tested over the last 10 years, you'll find that it's a trade that has the potential to win up to 70 to 80% of the time, guys. And I don't know why I have to remind traders this. Your job's to get paid. Your job is to make more money more than you lose money. You will lose. That's just a part of trading. But give yourself a statistical advantage every time you enter the market. This high probability trend trade, the most important thing that it does for you is it teaches you to read your charts. It teaches you to look at your charts, understand the information the indicators are giving you, and then turning that information into a trade. And you can't really put the cart before the horse, guys. You've got to get your advantages and turn those advantages into a trade. Chart reading is about 90% of your day. Um, if you sit in front of your computer for 6 hours, I don't know why you would sit there for 6 hours straight. About 36 minutes of your day is going to be trading. I was up a little bit before 6 a.m. Central this morning. I've taken one trade today. It was a good one too. Fit my rules, got in, got out. I actually got out way early. But one trade over the course of about 2 hours, guys. You don't have to be busy to be profitable. You have to be intelligent. You've got to read your indicators and you've got to make sure that your advantages are in place. But what you're going to find is that when you start to get good at these chart reads, you're going to understand where the market is likely to continue. This becomes your entry for the highest probability trend trade. Guys, you're going to learn to trust this entry. You're going to learn to look for this entry, and you're going to learn to never miss this entry when it sets up. You're going to understand where the market is likely to go. This is going to allow you to create profit targets. And finally, you're going to understand where the market is likely to stop. These are what we call termination conditions, guys. And termination conditions can just end that forward progress like it never had a chance. Termination conditions take away the room to your profit targets. Termination conditions can reverse the market. And you're going to be able to see these, identify these, and not trade into these. We are going to keep it very simple and very focused. We're going to talk about this high probability trend trade first. It's only 3 rules. I had someone tell me once, they're like, Mark, it's too easy. There's no way this works. It's too easy. And I always chuckle when people say that, because what happens is this trade isn't difficult. It's 3 rules. You learn them individually. You turn them into a trade, guys. It's when we start to overthink and add things. That's when trading becomes a little stressful. So let's keep it easy in the beginning. Each rule, I feel like I'm wound up. Each rule provides an advantage, guys. Your first rule is going to give you strong trigger lines. Strong trigger lines create the advantage of momentum. That's 33% of what we're looking for. Rule number 2 says that there's none of those termination conditions in the way, none of those likely to stop areas. This will give you a clear path. That's going to assure that you have room to your profit targets. Here's a little secret I'm going to let you in on. Once you understand momentum and clear path, guys, the sky is the limit. That is enough to create a very solid, profitable, consistent trading plan. But we're going to focus on the high probability trend trade entry. That's going to be your 3rd rule, and that one's going to put you into the market right where the market is most likely to continue, guys. These 3 rules. You want some of my coffee? I don't know why. I am wound up. Wound up. It's fun. It feels good. These 3 rules happen on only 2 charts, guys. That's it. We're not using those range charts that you see in the other room. We're not using giant time frames. We're not using monthly charts and yearly charts. And who cares what the NASDAQ is doing, right? We're going to use a large chart and a small chart. That's it. Large chart leads the way. Large chart is 66% of what you need. And the large chart is going to define the direction of the market. It will identify the momentum, whether or not it's advantageous through rule number 1. And it's also going to define those areas that can behave as termination conditions. That's where rule number 2 is going to keep you from trading into brick walls. Rules 1 and 2 have got to be met on the large chart before you ever turn your attention to the smaller chart, the faster chart. Guys, this is your refinement chart. What happens in 1 bar on the large chart, defining direction, momentum, and areas, it gets an x-ray through this small chart, and it gives you about 20 to 30 bars in there. We're going to use that refinement process, that little x-ray of that 1 bar, and you're going to be able to pinpoint exactly where the market is most likely to continue. And this becomes your best of the best spot to enter the market. And by using the refinement chart, what we're able to do is reduce risk. You're able to maximize your profit potential. And that's where rule number 3 comes in. That's your entry rule. And your entry rule is specific to the high probability trend trade. We use the 2 charts, and I really like this. And once you believe this, it makes it easier to stay in line. Who are you trading with or against, guys? There's the large crowd. This is your large chart. These are the people with so much money, the men and women with so much money, influence, and all of that great stuff, that if they wake up and they go, you know what, feels like a good day for an uptrend, that market's going to go up. These are the same people that create the momentum that we're looking for to give us that advantage. And these are the same people that are reacting to those key areas on your large chart, those potential termination conditions, guys. The large chart leads the way. The large crowd sets the tone. I haven't shared this picture in a while. I'm going to do it real quick. This is my take on it. If you know anything about sharks, guys, this is Norbert, by the way. We have named him. Sharks are the big money investors. Sharks are the institutional traders. Sharks are the people that get what they want. It's not our job to fight them. It's not our job to be the first person in the market. It's our job to go with them, to let them get the work done, and then we'll capitalize on the little snippets that they create for us. Large crowd leads the way. But there's a small crowd, and these guys have money. These ladies, they're backed. They know what's going on. And they fight, and they create these little pushes against everything that the large crowd wants. It's very strategic. They know exactly what they're doing, but they typically fail 70 to 80% of the time. The market continues with the large crowd up to 70 to 80% of the time. You guys will be able to pinpoint their failure spot, that point where the market is most likely to continue with the overall trend, and that's going to become your entry for the highest probability trend trade. So we're going to keep it simple and focused, guys. 2 charts, 3 rules, and we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. Can you guys hear me? Give me a Y if you can hear me. Let's see if it's just Pete. Only Ron can hear me. It's like the secret Ron club. That's it? Just Ron? Nobody else? JK, you got me? All right, thanks, guys. So Pete will know to go reboot. Guys, if you ever lose audio, usually rebooting Discord gets you. It's been a long time since that's happened. We're going to learn these rules. I'm going to break it down, guys. We're going to look at each of them individually. We're going to see what they look like visually. We're going to talk about the advantages. And that's going to be the course of like the first hour here, is making sure that you guys are comfortable with that. I'm even going to teach you how to study it. I'm going to give you guys something to track your progress in your study. And my promise to you is that I will give you everything that you need to be successful with the software by the time this day is over. The only thing that I'm not going to give you is experience. So we're going to work together to develop that. But it begins with learning the rules and then simulating. So often people are like, well, Mark, I didn't want to practice trades until I felt like I really knew it. Here's a news flash. You're going to be learning for the rest of your life. Don't feel like you have to know it all to get busy. Get in there on the simulator. Take trades. Practice. Simulate. But here's the deal. Every time you do during the learning process, guys, I want you to post in the room. I want you to tell me what you saw. I want you to tell me why you did what you did. And what's going to happen is we're going to work together to make sure that your read is correct. We're going to make sure that your entries provide the least amount of risk. And we're even going to start to work on your management a little bit, see if I can't help you get a little more out of these trades that you're getting into. Practicing the wrong trades, guys, it's horrible, because what you're doing is you're training your body to do the wrong thing. You're training your brain to do the wrong thing. Because when you just say, oh, it's simulator, I'm just going to jump in, and you win, your brain doesn't know the difference, and your brain tries to recreate that rules-breaking moment, and man, luck runs out once you go live, it seems. We're going to simplify. We're going to break it down into that high probability trend trade, and then I'm going to offer you the second trade, which is what we call a 50-50 trade. It's a medium probability trade. And that means that most of your indicators line up for the trade. However, a small issue exists. Your ability to read your charts to speak in terms of advantages is going to have you identifying that problem. You will be able to manage a little more aggressively, to take quicker profits, to get out if you need to, guys. And that medium probability trade is made possible by your chart reading that you're going to learn from the high probability trend trade. And here's the thing, guys. You have to know what looks you're going to commit to. You have to learn the Fibonacci and trigger looks so that they're easy. One of the things that people don't realize is that all we are doing is trading a pattern. We are literally trading a pattern that has been tested and proven to win more than it loses. We're not trading news releases. We're not trading gut instinct, guys. What we're doing is we're taking one very simple pattern, and when it happens, we're in the market. And if it doesn't happen, we're sitting on our hands waiting for it to happen. So post in the room and show me how you're reading your indicators. But guys, it becomes easy through the pictures that you take. And using the spreadsheet is going to help you. I give it to you every day. I'm going to give it to you again right now because I love you like you are all my children, guys. And there are 4 tabs. 4 tabs. Man, I really am kind of wound up. The first tab is a trade journal. That's all it is. Even the CME says, hey, guess what? Keep a trade journal. Track your progress. Make sure you know where you're going. That's what the first tab is here, guys. And you're going to fill this up every trade you take. Win, lose, or draw. You're going to have a picture, but not only are you going to put a picture in there, you're going to take the time to say, hey, guess what? Here's my momentum. And link is in the spreadsheet so you know how to do it. Did you have those strong triggers? Rule number 1, identify them, why they were strong, what rule is met. Give me an arrow. Let me know that you know what you're doing. Talk about the path, whether or not it's clear. Talk about your entry. Show me your exits, guys. And if you annotate your charts every time with these 3 things, strength, path, entry, what happens is you have something to go back and study. And that's how you get the most out of this spreadsheet. You don't just take these pictures and leave them alone to float around in space. You go back and study the spreadsheet every morning. What did I do yesterday? What did I do yesterday that worked? What did I do yesterday that didn't work? What felt easy? What felt forced? When Josh looked at his pictures this morning, he said, man, I can be taking better entries. I can be making more money easier with less risk if I just get in at the areas inside of favorable large triggers. And dollars to donuts, Josh is going to show me some great entries today. No pressure, Josh. But you're also going to ask yourself what didn't work. We had some pictures yesterday where somebody traded directly into termination conditions twice, and twice they lost money. And they're going to look at that picture this morning and they're going to say, dude, that is not serving me well. I'm going to avoid these termination conditions. I'm going to make sure that my path is clear. And if you do that every day, guys, it's going to accelerate the learning. It is going to set you up for success each and every day. The second tab, we have to learn these looks so they're easy, guys. So there's your strong triggers. There's your clear path. There's your high probability trend trade entry, exactly what it looks like. The green sections are rules being met. It's important to know what it looks like when it's time to take a trade. But the red sections are what it looks like when the rules aren't met. And I firmly believe that it is equally as important to understand what it looks like when your advantage goes away so that you train your brain that there's absolutely nothing to do with those nasty little weak triggers. And when there's a termination condition present, my best bet is to sit on my hands and not do anything. As you begin to learn to read your indicators, you're going to start to see your trade setting up. You're going to take pictures. You're going to annotate those charts. And when it's the best of the best, whether it's the high probability trend trade or maybe you're working on another trade, this green section gives you some place to begin to build your trading plan. There is a whole section dedicated to management. And the cool thing is when you don't have to try so hard to see your entries because you've done that study, because you've gotten your feedback, you're going to begin to see patterns. You're going to see things happening in the market that seem to happen all the time. And some of these are going to give you an extra advantage. Some of these are going to tell you to hold longer. And some of these patterns are going to say, hey, pump the brakes, not ready, not a trade yet. And then there's a whole section dedicated to those termination conditions because, guys, I'm going to be honest with you. Rule number 2 is the most broken rule. The final tab, I've got to slow down. You guys got to tell me to slow down. The final tab is where I've stolen pictures from you guys in the room. This is where I've taken your amazing trades, where I've taken your beautiful chart reads. And I said, that is so good, I could teach a class with this. And I've dropped it into the green section, guys. And there's almost 400 pictures in there. Almost 400 pictures of you guys being brilliant. Next-gen users from all over the world using these advantages and capitalizing. I've taken the high probability trend trade entry sequences for both long and short, and these describe it step by step all the way to entry. There's a very mechanical management plan for the beginner so that you can focus on moving stops and targets without emotion, and then that will take you to building a bigger management plan. A whole section on the patterns that I see so that you can look at them. And then guys, another whole section using those patterns to identify termination conditions. Your goal is to make sure that your section looks like my section. Alan, your 13.2 chart is showing a different price. It most certainly is. So what I would probably do, Alan, just to see. And remember, I'm not the tech guy, but I've broken everything at least twice. Alan, I would probably do this. I would repair and reset data. You do have to disconnect and reboot NinjaTrader to do it, but I find most of the time this kind of helps me out and gets me where I need to be. It may be with your data provider, but that's always my first step when things don't seem to line up. If that doesn't fix it for some reason, I would go to Jason, because chances are Jason can fix it a lot faster than me. I hope that's helpful. For you newer folks, you will find that I always try to be helpful, but I am not a tech guy. I'm an artsy-fartsy kind of dude, and I'm learning tech, and I'm getting better at tech, but Jason is always the quickest path for you. So we're going to get at it. We're going to keep it simple. We're going to learn some rules. You guys are going to simulate. Simulation isn't only taking trades, guys. It's learning how to enter the trade. It's learning how to move your stops. It's learning how to get those targets, how to move things around, how to scale your charts. Become comfortable with the platform so that when you really are trading, you can work through any issues that you have. I don't know if I mentioned this. It's only 3 rules. That's all we're going to talk about. We're going to talk about strong triggers. We're going to talk about termination conditions. And finally, we're going to make it so you guys can pinpoint where the market is likely to continue. And I figure rule number 1 is probably a great place to start, guys. This is the easiest lesson, in my opinion. Rule number 1 says that the large chart, the slow chart, the large crowd must have strong trigger lines. So the first thing that your large chart does, guys, is it defines the trend. If the background is green, it's going up. We're going to look for rules to be met for high probability trend trades long. If the background is red, it's going down. We're going to look for rules to be met for high probability trend trades short. For the brand new user, this is a little bit of a safety feature, because the only way that you can have strong triggers is if your small triggers, these solid lines, and your large triggers, these dashed lines, are the same color as the background. So when the background is green, both of these are green. And when your small triggers break above and away from the large triggers, when space is created between the two, I want you to get the visual in your head. Scissors opening, getting ready to cut. When I have this look, guys, the odds are favorable for the market to continue up. And that's odds favorable momentum. You're going to hear that in the room all day long. OFM, you'll see it on charts. When the background is red, when the small triggers are below the large triggers, when the space is there and the scissors are open, guys, the odds are favorable for the market to continue down. Odds favorable momentum. This is strong triggers. The look is consistent 100% no matter what chart you're on. I don't care if it's a day chart, month chart, week chart. I don't care if it's a range chart, Renko chart. If you have large and small triggers on there, it requires separation to create strength. This is the look that pushes the market in the direction of the trend. This is the look that gives those key Fibonacci areas the potential to break. And guys, this is the look that covers a lot of the mistakes that we make as brand new users. And when those scissors close, we have what's called weak and large triggers. There's a weakness. The momentum is died. And when I have weak triggers, guys, anything can happen up or down. You'll find that I'm a big fan of language over and over and over. Strength, weakness, odds favorable, anything can happen. Start drilling these little anchor words into your brain, and what it does is it makes you just not even want to take a trade with weak triggers, because you're thinking to yourself, dude, anything can happen up or down, and that's not the best way to trade. So let's open up a large chart real quick and let's just see if we can identify it. I want to take a picture with you guys if you don't mind. Take a little selfie here, right? I want to show you how the easiest way to learn this look, to commit this look to memory. You got it, Alan? Awesome. I'm going to draw an arrow and I'm going to put it right in the open scissors here. And this is how I'm going to annotate this chart. Uh-oh, I think I'm killing my Snagit. I'm the only guy in the world that can crash Snagit. We'll just cover that one up. So we're going to do this. Background green, up. Smalls and large green. That's good. Space between. We're going to say strong triggers, odds favorable momentum, rule 1 met. Does that make sense? Can you guys give me a why if you're with me? This is your strong trigger look to the upside. This will always be your strong trigger look to the upside. Here's what I'm telling you right now. If you take the time to take these pictures and to write that out, guys, you are committing it to memory. You're not going to mess it up. And watch this. I'm going to do the same thing here. I'm reinforcing the rule or the idea. The background is red. I'm going down. Smalls and large are red. I'm reminding myself that this is what I need. Space between. My scissors are open. That's strong triggers. Strong triggers means I have odds favorable momentum. Rule 1 met. That's only rule number 1. But guys, what I'm doing is I'm teaching you how to get great at your chart reads, how to recognize it. Look at this. I can even do another arrow right here. That's strength twice. And then I want you to see this. The scissors close. The smalls are inside of the large. Smalls inside of large. Weakness. Anything can happen. Rule 1 not met. And guys, not only am I putting this on there so I can recognize the look, look at what happened with those weak triggers. Look at what happened when anything could happen. Anything did happen. And that market went up. And it went up all the way to those key Fibonacci areas. So what I want you guys to do is start taking these pictures every day. Commit yourself to about 15 pictures. And what's going to happen is you're never going to make the mistake between strength and weakness. And guys, that is the easiest lesson that you're ever going to get. Now you can identify trend and now you can identify strength. Is everybody good with that? Can you give me a why in the room if we are cool to move on to rule number 2? Rule number 2 is the one, guys. Rule number 2 is going to make sure that you have room to your profit targets. Rule number 2 is going to assure that you have a clear path. And rule number 2, again, on the large chart, guys, we are going to define where the large crowd is going to make decisions. We're going to define where the market may reverse. And we're going to do it with horizontal lines on the large chart. And there's about 4 or 5 different ones, guys. There are divergence highs. This is a magenta line. That's what magenta is. And it will print if there's a loss of momentum at this pivot. On its own, this line is just a loss of momentum. But if price comes back to it, it can stop the market cold. The same is true with the divergence low line, cyan line. That's what cyan looks like if you're not familiar with the term. And this prints off of a low pivot if there's a loss of momentum, guys. These lines become like lines in the sand and they can stop the market. They can reverse the market. We're going to use Fibonacci resistance, the red fibs. And these red fibs, when the market is trending up, may stop it, may create a bounce. This may be where the buyers and sellers fight for the next 3 days. Who knows? Usually not that long. Support catches it the other direction, guys. When the market is trending down, blue Fibonacci support can stop it, can create a bounce. There can be a fight. And then the same thing with these yellow 1-to-1s. And what you're going to find is that these areas are where decisions are being made. These areas are also where the market is likely to go, as well as where the market is likely to stop. And you know about them long before the market gets to them. So if the market is trending up, if the momentum is up, if the price bars, those dynamic Renko bars, are moving to the upside, Maybe you're in a trade, maybe you're looking for a trade. Guys, if price reaches resistance, a divergence high, yellow 1-to-1s, red Fibonacci resistance, when price reaches this area, that's what sets off the decision-making process. So we're going to let those T3 trigger lines tell us whether or not we should trade up or if we should pause, guys. And if price reaches resistance and the triggers remain below, we're going to sit on our hands. This is a termination condition. In the moment, right in the now, no more long trades into this area. It may stop the market. It may create an untradeable bounce, or it may reverse it completely. If it reverses it completely, guys, this is a strong top, and a strong top is the precursor to the highest probability trend trade you can take the other direction. And if that strong top pushes it down and all that momentum is screaming and we get to Fibonacci support, all you have to do is ask yourself, where are those trigger lines? And if they remain above support, guess what? No trades into the area. Rule number 2 is not met, guys. You don't have a clear path or room to your profit targets. And this rule right here is going to keep you out of a lot of trouble. If this termination reverses the market, those large triggers pinch and roll, we're going to call it a strong bottom. And a strong bottom is the precursor to the highest probability trend trade you can take. So learning when not to trade is going to pay dividends, guys. The most successful traders I know do less. They know when to not trade, and they don't take trades when the advantage is gone. Areas break. Momentum breaks areas. Emotion breaks areas. Price bars get to the other side of areas, guys. And we don't consider an area to be broken until both the small and the large triggers get to the other side. Notice that we're using the trigger lines to determine whether or not it's a termination condition or whether the area is broken. You will never hear me reference the color of fibs. You will never hear me reference the price bars when we're talking about the high probability trend trade. If price reaches support and the triggers have not broken through, I'm going to sit on my hands because I simply don't know what's going to happen. If my small triggers and my large triggers get below support, support's going to begin to behave as resistance, guys. My path is now clear, and it will remain clear until I reach the next area. Everything's going up. Price reaches Fibonacci resistance right here. We can see how far below the trigger lines are. Absolutely no trades into that area. But if both the small and the large get above resistance, resistance behaves as support. My path is clear, and it will remain clear until the next area is reached. And then the process just starts over. So let's open up a big chart again, guys, and let's take a look. We'll just scroll back a little bit. There's your untradeable bounce. I hope you see it. Tick above, weak triggers, pulls all the way to resistance where we get an untradeable bounce and actually get some consolidation. And rule 2 keeps us out of it. Here we can see where resistance broke, the triggers got above, and look how price pulls right back to that new support and continues in the direction. So once again, one of the easiest ways to get to where you want to be with these is just like this. Let's take a picture and let's draw some arrows. And we'll do it right here. This will be my first one. So I'm going to go through and I'm going to type out what it takes to create a termination condition. Price reaches the area. Where are my triggers? Triggers remain above. This is a term. No clear path. Rule 2 not met. Does that make sense, everybody? Even with odds favorable momentum, you're going to learn to sit on your hands and do nothing because look what happens right off that key area. And then I can use this one right here. And even though the market didn't continue up, it doesn't mean that the rules change. Smalls and large break above the area. The area is broken until I reach the next one. And that's how you're going to identify that broken area. So what you're going to find is that you'll be able to understand whether or not you should trade into a line, but it's always easier to trade from a line. into an area may create a bounce. From an area, we're looking to get to that next area more often than not. And guys, this is your very basic. If price reaches resistance, the triggers remain below, no trades, it's a termination. If price reaches support, the triggers remain above, no trades, it's a termination condition. The path will never be clear until both the small and large get above resistance or below support. Can you guys give me a why if you're good with that? This is really the most basic form for you guys. This is the most like ground floor to make sure that you can stay out of trouble. But man, there are so many opportunities in the market. And your second opportunity, that second trade that I'm going to teach you guys, is what we call a 50-50 trade. I'm just going to take this middle picture right here. And I want you to see something. These small triggers, and oh my gosh, embrace this word, please. Smash. 2 to 3 points above the problem area. But the large triggers are lagging behind, guys. As long as I have odds favorable momentum, this is the look that tells me the fib has the potential to break. All of this strength, small triggers smashing through, this tells me that this fib has the potential to break. But guys, it's only potential. It's not a clear path. 50% of my triggers made it through, 50% of my triggers did not. This is what we call, you guessed it, a 50-50 trade. And a 50-50 trade is void of a clear path, which means that an issue exists. I'm going to give you a rock solid plan to optimize your chances of success with that 50-50 trade. And what you will find is that the majority of your trades, once you're comfortable reading your indicators, will become those medium probability trades. So it's important to understand the basics so that you can identify that next trade. There will be times when your path is not clear because areas are stacked. There will be times where you will be forced to sit still, to do nothing, to not have a clear path, and really to not be in the market. It may reach support and you anticipate the break, you're waiting for the break, you're hoping for the break, and then they go to the next area. And then they hit the next area, guys. And this is 90% of your day. 90% of your day is doing a whole lot of nada. Not a whole lot going on. Just going to sit on our hands and not give money away arbitrarily. And guys, the futures markets trade billions every day. Billions. Your job is to capture 500 or so, right? That puts you in a six-figure income. Billions of dollars. You don't have to be in every move. Every dollar is not your dollar. Every tick is not your tick, guys. The key is having advantages, making sure that you have a statistical advantage before you pull the trigger. And Fibonacci, and this is why most of you guys showed up with us anyway, Fibonacci gives you the ability to see where the driving forces, where the large crowd, where the men and women in control are likely to react, where they can make decisions. And very often, rule number 2 will keep you out of consolidation. It'll keep you out of chop, guys. And 90% of your day is spent waiting for advantages. 10%, that's not a lot. You'll be trading based on these advantages. So learn to speak to yourself. Every time you look at a chart, hey, I'm looking at my large chart. Do I have momentum? Your dog should understand what momentum means by the end of the week. Do I have a clear path? And if the answer is yes, if you have strong triggers and nothing in the way, hey, good morning, Abdulaziz. It didn't affect me at all. I am in Texas, but I am still waiting to hear from the Novaks in Sarasota. I don't know. I haven't heard. I know that we were chatting last night. They lost power, which means ultimately they're going to lose internet. And I don't know how the cell phone signals are. So I'm hopeful and optimistic that the storm surge stayed under 10 feet. But I don't know. I can't find that information anywhere. So if someone in the room is good at finding that information, give me a heads up on what the storm surge was. Anything over 10 feet and he probably lost everything. So I'm rooting. I think 9.5 was his cutoff. And he gave himself about a foot wiggle room because he started stacking things on pool tables and counters. But thank you. Thank you for that. And thank you for checking in. Momentum and a clear path, guys. Once you have it, it's time to look for an entry. Once you have it, it's time to say to yourself, let's go pinpoint where the market is most likely to continue. Let's go find that best of the best point. Let's take a trade. And guys, there is one time when I have momentum and a clear path that I have to kind of abort the mission. And that's if I go to look for an entry and I see 3 divergences in the same price range on my smaller, faster chart. Remember, the large chart's a big, slow chart, right? It's a freight train cranking down the road. The small chart refines it. You're going to see a lot of fluctuations in a small chart that you'll never see on a large chart. If I see 3 losses of momentum, 3 cyan lines from a low, or 3 cyan line or magenta lines from a high, guys, this is a termination condition. My path is no longer clear. This pattern may terminate the trend. This pattern becomes even more powerful when you get weak triggers. We learned that one from rule number 1. And this pattern becomes more powerful still if your final pivot is higher than the previous from a low or lower than the previous from a high. And guys, this little head and shoulders pattern. So this look right here is the only time I'm going to pump the brakes on looking for an entry. And let's just for grins, let's see something. I'm going to put a little box right here where the market seemed to turn from nowhere. And let's look just for funsies. What did that box look like on a smaller, faster chart? Did our smaller, faster chart help us avoid it? Man, that's like 2:30 in the morning. Whoops. There's our box. I'll be damned. 1, 2, 3 divergences. And I promise you, I didn't check that before class, guys. Does everybody see that, though? Your large chart had momentum. Your large chart had a clear path. And you might have taken an entry, and 3 divergences said, whoa, whoa, things are changing. And let me show you how that works, guys. If I take this box and I put it around the bar that was going up and the bar that went down, inside of that one bar right there from the top to the bottom is all of this information the small chart refines. Kind of cool, right? So 3 divergences, pump the brakes. But if you don't have 3 divergences, guys, you're going to use a limit order to buy or sell a pullback in an area inside of triggers. You're going to use a limit order because the precision is there. And you are going to wait for the market to come to you. You're not going to chase trades. You're better than that. And you're going to wait right at an area, at a fib, at a mid-band, at a yellow 1-to-1, inside of what we call favorable large triggers, guys. Because trigger lines are where price returns. It doesn't matter, once again, no matter what chart you're looking at. If I'm looking at a small chart, price loves to return to the large triggers. If I'm looking at a large chart, price loves to return to the large triggers. So what we've done is we've just taken the large triggers from the large chart, dropped them on our entry chart, and we have 2 options for trigger lines. We have the large. These are the smooth. These are native to the 5-1. We can use these to determine momentum. And then we have what's called the synthetic. And these are the large triggers from the large chart, guys. And the reality is that price may return to either. So when they are overlapping, one on top of the other, like 2 snakes riding piggyback, ladies and gentlemen, this is what we call favorable large triggers because it gives you the smallest amount of space to put an area inside. Fibs, mid-bands, or yellow 1-to-1s. And those areas inside of triggers are what we expect to create a bounce. So if I'm looking at my small chart and I see the large triggers, small chart may retrace back to the large triggers. And I have 1-to-1s and a fib, and these may produce a bounce. The synthetic triggers, the large chart may retrace back to these synthetic triggers. I have a mid-band in there. That may produce a bounce. Notice that I use the word may because I don't know if it's going to go from 1-to-1s or a fib. I don't know if it's going to go from the mid-band. I don't know if it's going to blow right through. But what I do know is that areas, fibs, mid-bands, and yellow 1-to-1s inside of favorable large triggers give me a window. This window is exactly where the market is most likely to continue with the trend, where it is most likely to bounce and continue up, guys. And this window of opportunity is where we're going to put our limit orders, where we're going to wait. So I'm going to go through the process real quick. And you know what? I'm going to do it from the one off of the spreadsheet because I want you guys to see this. Bum, 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 bum. This is going to be for a short trade. Are not collated? Man, Jerry, that's a great question. And if you give me 4 minutes, I'm going to give you the perfect answer. Promise. But I want to go through this real quick on the best of the best. Guys, the large chart leads the way. The large chart says odds favorable momentum. The large chart says that we now have a clear path. And I want you to see we're getting all of this information from one bar. Once we get this information, once it's time to look for a trade, you're going to go to the smaller, faster chart. And you're going to notice that it's absolutely screaming to the downside. Your fear of missing out is going to be a very real thing. But we have to wait for the reversal bar, guys. This signals the beginning of a pullback. That small little up push against everything that the large chart says. This is your small crowd fighting. The reversal bar is not your entry, though. So what we're going to do is once that reversal bar prints, and when you get good at this, you'll even anticipate it before it prints, you're going to look for your large and synthetic triggers, one on top of the other. The further apart they are, the wider the range, the more risk you may have, guys. So we're going to identify triggers, but you have to remind yourself, these triggers are where price may return. These triggers are not my entry. The reversal bar says look for them. The triggers say, hey, this is where you're going to look for areas. This is where you're going to look for fibs, mid bands, yellow 1-to-1s. There's the blackout right there. Come on now. There we go. You're going to create a window of opportunity, a point where the market is most likely to bounce, guys. And you're going to do that from the lowest form of resistance, closest to the reversal bar. And it could be a fib, a mid band, or a yellow 1-to-1. And it will extend to your highest point of resistance. Fib, mid-band, yellow, 1-to-1. And here's the key, guys, and it's in all caps. They need to be inside of triggers. Price may return to the triggers from the bottom to the top, but it's the areas inside that may create the bounce. So once you define your window, all you have to do is right-click on your chart and activate a limit order. And that limit order is going to go just below the lowest point of resistance, guys. 1 to 2 ticks below the lowest point of resistance. And pray, if that's your thing. Hope, wish, want that the small crowd gets to your entry. Because if they do, if that small crowd has it in them to get to your limit order, ladies and gentlemen, you are short. You're in a trade short, and you have odds favorable momentum on your side. You have absolutely no termination conditions in the way, and you entered where the market was most likely to continue, guys. And this entry is the entry for the highest probability trend trade that you can take. So you're going to wait for the reversal bar. You're going to identify your triggers and create a window from the highest point of support to the lowest point of support inside of favorable large triggers. And your job, Josh, is to learn to trust this entry, to study this entry, to believe through repetition that this is your best chance to have the least amount of risk, to have the most room back to profits. And guys, anything on the wrong side of the triggers, any line beyond the trigger lines is not a part of the window, because I expect price to return right here. I expect price to bounce somewhere potentially above it. So once I get below those triggers, below those areas, I'm no longer in a trade that I want to be in, guys. And actually, this is the area that we say is where the market should not go if this trade's going to produce a winner. So go in the other direction. Reversal bar starts the process. It says, hey, the fight is on. You're going to locate your triggers, large and synthetic. This is where we expect price bars to return. But it's the areas inside, fibs, mid-bands, yellow 1-to-1s that we expect to create a bounce. I want you to picture I'm throwing a ball as hard as I can. And this area inside, this is the brick wall, guys. This is where I expect the ball to bounce. I don't expect it to bounce 2 feet in front of the wall. And more importantly, I don't expect it to bounce On the other side of the wall, if I throw it through the wall, guys, it's going off to infinity. This area above the triggers is where the market should not go. This is not a part of the equation. Guys, you've got to study entries. Give me 20 days of pinpointing where the market is most likely to continue, because when you do that, you by default know where the market should not go. And this is your first stop, guys. This is your initial stop. This is the beginning of your management. Actually, that's not true. Odds favorable momentum is the beginning of your management. No terminations is the beginning of your management. Pinpointing the perfect entry is the beginning of your management. You will manage risk long before you ever take a trade. You will know exactly where your stop should be before you ever enter that trade, so that you can determine whether or not you're willing to accept that risk. Guys, this stop will be 4 to 5 ticks beyond your trigger lines, where the market shouldn't go. And here's the thing, and guys, don't get sad about this. Every 10 high probability trend trades you take, anything that wins 70 to 80% of the time, guys, they're going to hit your stop 2 to 3 times every 10. It's okay. It's what we call a cost of doing business. And what you'll find is that small losses are a normal part of a positive equity curve. And you know exactly where to keep them the absolute smallest. But here's the beauty about what we do. With all of the momentum, with the clear path, you're more likely going to get a reversal bar in the direction of your trade. And this reversal bar says, hey, guess what, Cindy? 2 ticks above it. We're doing everything that you want us to do. Hey, John, guess what? We're going up now. Let's go 2 ticks below it, sorry. And it's not uncommon to see Nexgen users take these great entries, get that reversal bar, and even if the trade doesn't work, find themselves losing 3 to 4 ticks instead of 13 to 14 ticks, guys. And that's kind of how we get to where we want to be. The goal is to preserve equity. The goal is to be precise. And because you wait for the pullback, you got an awful lot of room to get to that next area. Pretty cool, right? Guys, that's your high probability trend trade. That is the perfect. That is the best of the way. When the unicorns are singing, guys, you have momentum, you have a clear path, and you have an area inside of favorable large triggers. Are there any questions about any of these rules individually? Remember, you got to study them. They've got to become easy. Jerry, this one's for you. Guys, once you're looking for those favorable large triggers, this is the best of the best. This is the easiest look, guys. This is the one with the least amount of risk. But the reality is this won't always be the look. And Jerry asked the question, how do you trade if the synthetic and large triggers aren't located on top of one another, right? Guys, when those triggers split, you're going to see this a lot. So Jerry, here's your answer. The first thing to having the best chance of success with this look is understanding that price may return to either. That price may come back to these large triggers, and that price may come back to these synthetic triggers, which means that you have 2 points where those price bars may go. So the reality of that, let's take a picture, is that from this reversal bar, I have to automatically anticipate that price may go that far because my triggers are split, because that's the bottom of my synthetic triggers, right? And I know because I listened in class, my stop goes all the way down here, and that may be an enormous amount of risk. And then the second thing that I know, because I studied hard, is that a mid-band may create a bounce. And I also know that Fibonacci support may create a bounce, but my stop still has to go all the way down here. And Jerry, that's huge, especially when it could go from here and it could go from there, right? Does everybody feel that little bit of indecision? That, man, I hope, I wish, I want, but I really don't know because I'll never know what the market's going to do. How many times have you seen this look, gotten in at the mid-band because you didn't want to miss the trade, only to get stopped out all the way down here because you weren't willing to put $300 worth of risk on the trade? I've done it. I have. So here's one of the ways to combat it. If you have those split triggers, if your window of opportunity is huge, if your stop has to be way off in the distance, guys, insist on that reversal bar. Insist on that confirmation bar. Say to yourself, this is not the perfect entry. Let me force the market to go in the direction of my trade. Because what happens when you get a reversal bar? Your stop is 2 ticks below it. You've minimized your risk. It's no longer way down here. Now it's all the way below that one. And Jerry, in my opinion is worth exactly what you pay for it. When I have this much indecision on an entry, I wait for a confirmation bar. I accept the risk because now it's established. And here's the thing. It may still push down to here. And if it does, maybe I take it again from the lower area. But at least I don't get stopped out all the way down here from this entry if this is one of the ones that aren't going to work. Does that make sense, Jerry? Does that help a little bit? Guys, you're going to see this. You're going to venture outside of the high probability, the best of the best. And this is just one way to combat when it's not perfect. It's okay to insist on confirmation if something isn't just right. So you got to learn what it looks like when it's just right. Odds favorable momentum, guys. It always leads the way. That market pushing is great. You paid a ton for my opinion. Worth every penny. Thanks, Ron. Gotta have that path, guys. When your large chart looks like this, that is chock full of giddy up. Let's look for an entry. I don't enter on the reversal bar. That's way up here. My risk is all the way down here. I don't enter when it hits the triggers. I need the areas, guys. Fibs, mid-bands, yellow 1-to-1s. And once I'm in this trade, we're going to do something that's pretty awesome. I'm taking pictures today. Bum, 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 bum. Here we go. I want you to see something. From the top of this bar, which is the beginning of the pullback, I've got 8 ticks to get to trouble. 8 ticks, that's all. Who's going to risk that much money for 80 bucks? Anybody? Nobody, right? That's ridiculous. That's crazy. But we don't enter up here. If you wait for the pullback to the area inside of favorable large triggers, guys, that 8 ticks is difficult. There's all the areas. That 8 ticks is now somewhere around 33, which is $330. So what do? When we wait for the pullbacks, guys, we minimize our risk because we know where the stop goes. When we wait for the pullback, we maximize the profit potential. And guys, this is your high probability trend trade. And this is exactly how you're going to study it. You're going to scroll back. You're going to do a little historical study. And when the rules are met on the large chart, circle the tails that you see. These tails are the pullbacks. If that circle lines up with an area inside of triggers, guess what? You've got a great picture of what it is that you're looking for. So let's see if we can find one on crude oil. Guys, have I had any on crude oil today? Can I open my charts? There we go. We definitely got the 3 divergences look, didn't we? Boop, 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 boop. Well, here we go. There's odds favorable momentum. And this is one of those potentials to break, right? The smalls are through. This one is a clear path. Actually, both of those are clear paths. Let's go back and see what they look like. This one was on the wrong side of triggers where the market shouldn't go. This one came back to the mid-band and maybe stopped you out. And Jerry, this is a great lesson here, guys, because you're going to get to this point. Does everybody see how the large chart says that it's time to go up? Does everybody see how the large chart on both of these bars says momentum and clear path? Rules 1 and 2 are met, right? Can you give me a Y if you see it? All right, because this is going to be a great lesson for you guys. And we're going to do it like this. Everything says up, the path is clear, life is good, children are singing, and here's my small chart. And I'm looking at it as it's going up, and I'm going, well, here's my large, here's my synthetic. They're overlapping. That's amazing. But as the market continues up, what I notice is that my triggers are all the way up here. But dagnabbit, my areas are all the way down here on the wrong side of the triggers, guys. This is not, whoops, get back here. This is not the best look, is it? Because once I get to the wrong side of the triggers, I have absolutely no idea how far it's going to go. And here's a reality. I don't know if it's going to stop at Fibonacci. I don't know if they're going to retrace to the mid-band. Hell, I don't know if they're going to go all the way down here. But here's what I do know is my large chart is perfect. My large chart is amazing. My large chart says, Mark, we're more likely to go up than down. So I say to myself, there's my reversal bar, and here it comes, and I absolutely, positively refuse to arbitrarily enter in an area on the wrong side of the triggers, guys. Does everyone see it? I'm on the wrong side. I'm on the losing side. I'm on the bad side. I'm on the holy crap, I don't know what's going to happen side. But my large chart is so pretty. There's so much momentum, guys. The path is so stinking clear that I might say, if I get a reversal bar, I'll enter that trade. Why? Because now my risk is established. Now they're going in the direction of momentum. Now they're going in the direction of a clear path. And this is a phrase that you should probably write down on a piece of paper. If my entry isn't perfect, it's okay to wait for confirmation. Does that make sense, guys? There's a cost associated. You're not in at 16, you're in at 24. But with all that momentum and a clear path, I guarantee you got paid. And look, it happens again. And then it goes up, and I'll be darned. It happens again. And eventually, it goes up with that momentum. And what you're witnessing, guys, is the small crowd fight. All of the indecision in the small crowd. You only got 2 divergences. It just wasn't perfect. Confirmation helps when it isn't perfect. Being able to manage helps. You might have had to take this one 2 or 3 times. Or you may have just tried it once. When it didn't work, you said, I'll let it break, and I'll look for my next best option. And then when you get to that potential to break area, was that it? No. Smalls are through, large or not, all the momentum is there, guys. Loss of momentum, split triggers. This isn't your best look. This isn't your best look. Guys, is it okay if you don't have a clear path or the perfect entry area to just sit on your hands and say, you know what? This isn't my money. This isn't my trade. I don't have enough going on. And how silly would it be for me to call my wife and say, hey, Jenny, guess what? I just got my ass kicked on a long trade. I knowingly gave up 66% of my advantages, but I really hoped that it would go up. Guys, momentum is great, but it's the combination of the 3 that give you the advantages you need to feel good about pulling the trigger. I've got momentum. I do not have a clear path. I've already got another loss of momentum on a small chart, right? If you chose to take it, you might have gotten in, but you're managing assertively because it's medium probability. Jerry, I'm glad you liked that lesson. I teach the most conservative approach, guys. I teach the way to do it the best, the way that gives the highest chance of success, the one that optimizes your chances of success, guys. But the reality is, when you're a chart reader, doors open. So how do I become a chart reader sooner than later? Well, let me make this a little bigger because I've got old eyes. To get to where you want to be, you've got to recognize these looks and patterns quickly. You've got to recognize strong triggers. You've got to understand termination conditions. And I know on day 1 it feels overwhelming, but I promise you there's a fast way to get there. And it's taking pictures, not trades. Go take 25 pictures of strong triggers, guys. Go take 25 pictures of weak triggers. We did this earlier, didn't we? Where we said, hey, this is strength. This is exactly what it looks like. This is why it's strength. This is what it means to me. This is weakness. This is why it's weakness. This is what it means to me. And then all you have to do is take that picture and go to your spreadsheet, guys. Drop it in there. I'm going to drop that picture in 2 different sections. I'm going to put in a hyperlink, and this is on your first one, how to do it. Strong up and down. I always know what it looks like, but here's the deal. Now I know exactly what it looks like to have weakness. And guys, I got both of these in the same picture. So by taking one picture, I knocked two out. If you go through the process of taking these pictures, of annotating what it means to you, of committing words to looks, guys, you're not going to mess up strong triggers, weak triggers. You're not going to mess up terminations, weak. And when you do this, you're just going to piece these together to create the trade. So I'm going to give you that. And then to help you with that, I'm going to give you a high probability trend trade checklist. This defines that strong top and bottom, exactly what it looks like. There's also a link to a really cool video that my brother put together on tops and bottoms. There's the picture of momentum and weakness so you don't confuse them. There is a termination, the potential to break, and also the clear path. And then there's the window of opportunity, exactly where your limit order goes to enter this trade, guys. The second page is the same checklist without pictures. Put this on your desk. Grab a crayon. Make sure you can mark yes to each and every one of these. Guys, that strong top or bottom isn't mandatory, but it creates an enormous amount of warm fuzzies when you look for the high probability trend trade after it. This checklist, never had anybody in the history of this checklist be able to mark yes to each and every one of these and do worse than 70%. And to be honest with you, my engineers that did it, I believe it was 83.2% is what he came up with when he followed this and tested it historically over the course of a year. You've got to know what these look like. You've got to commit these looks to memory, guys. And then once you do, trading becomes pretty stress-free. You're going to grow as a user. You're going to grow as a client. You're going to grow as a chart reader. So while you do that, while you go through this process, while you're learning, why not give you a plan that optimizes your chances of success with that high probability trend trade? That's exactly what the KISS plan is. You people in business, you remember what KISS means, right? Keep it simple, sunshine. We're going to keep it simple, guys. The more you look for, the less you find. This is a gospel truth. This is a stepping stone in your learning journey, guys. This is not your only trade. This is your first trade. This is the trade that typically wins more than it loses. This is the trade that creates confidence through the memory of success. This is the trade that teaches you to read your indicators. And then through simulation, study, class feedback, and continuous practice, you'll create your own plan based on your ability to read the indicators. So define your entry. Don't fight the large chart. And then once you're in, all of your brilliance puts you in a position where you can manage, where you know exactly where your stop goes, beyond those trigger lines, 4 to 5 ticks, where the market shouldn't go. And the market's either going to stop you out, or it's going to give you that magical reversal bar, guys. It's going to say everything is doing exactly what you wanted it to do. Let's go ahead and reduce risk. Let's move our stop. First stop movement follows the reversal bar. And you are 2 ticks. Cindy, I see you deleting stuff. You better get that trade back in there. 2 ticks above that reversal bar. And guys, there's nothing to do. Sit on your hands. What this management plan is doing is it's giving you the most mechanical way. It's giving you nothing but a series of if-thems. It's helping you reduce the emotion, guys. 2 ticks above, nothing to do. Roll away from your desk. You're either going to get stopped out for a tiny little loss, who cares, no big deal, or it's going to go to your first target. Your first target is only $100 away from your entry. And with all that momentum, clear path, guys, you're going to hit this one more often than you don't. $100. First contract's gone. You're out. You got paid. Life is good. The butterflies in your stomach have just flown south, guys. Those sweaty palms are no longer sweating. You just made money on the best entry ever. You just made money on the most mechanical management. And now you're going to move your stop to break even, and you're going to say to yourself, you know what, self? Because that's how we address ourselves. You know what, self? The only reason I'm in this short trade anyway is because my large chart had absolutely nothing in the way. The only reason I pulled the trigger on this trade was because I had nothing to create a bounce. And you're going to hold for your second target, guys. You're going to have no risk on the trade, and you're going to say to yourself, no matter what my gut says, no matter what fears creep in, I'm going to sit on my damn hands and I'm going to let it hit the second target, or I'm going to let it hit that break-even stop, guys. And if it goes to your second target, if it makes it all the way to the second target, you just got paid $300 on the highest probability trend trade you can take. And if that's the best you do every day, that's a $75,000 year. But I'm here to tell you right now with the utmost confidence, if you do the work, if you learn the patterns, if you become a chart reader, you're going to find that your daily potential is well above $400 a day. You're going to find that it's not difficult to make $600-700 a day. And you're going to be able to do it consistently, and you're going to understand these advantages. And every time one of these advantages disappears, every time you do without momentum or a clear path or an entry area, because you're training yourself to speak in terms of advantages, you're going to know what you're up against. You're going to know to manage aggressively. So that's the high probability trend trade, guys. This is the same thing every day, the first hour every day. If you're on day one, you are confused as all get out. If you're on day three, you're saying, hold it, this is starting to click. If you're into your first week, you're like, I can't wait to start making money with this. I'm excited to study and to ask for feedback. But guys, before you go live, and man, let your learning process go as long as it needs to go. If it's a week, outstanding. If it's a year, who cares? We're all young, right? But there's two things that you have to know before you sit down and trade for real. You have to know why you're entering a trade. If you're on simulator, you're learning why you're entering a trade. But then you have to know why you're going to exit. And management tends to be the more difficult of the two, because now you have something to lose. And you've got to learn to make it mechanical. You've got to know exactly what it's going to take to get you to move stops and exit conditions. And your rules are patterns that have been proven to win more than they lose, guys. And the more consistent you are at following your rules, that proven pattern, the more likely you are going to be collecting profits. It is your process that yields the results. It's the execution of the method that yields results, guys. Having a statistical advantage each and every time you enter the market. And rules, because you know it's a pattern that wins more than it loses, because you know that 7 out of 10 times you're going to find success more often than not, guys, rules help remove the emotion that is associated with trading. It eliminates the need to know what's going to happen next. You will never know what's going to happen next. So, for the brand new user, if you follow the rules to enter a high probability trend trade, learn to follow the KISS plan to get you out of the trade. Learn to become a chart reader. And then you'll begin to see other reasons your management plan will grow. Not only other reasons to exit, but my favorite, reasons to hold for bigger moves. Reasons to turn that $300 trade into a $700 or $800 trade, because this look says, hey, let's hold. Let's give all that momentum and a clear path a chance to make the next area. We had some people in here yesterday riding that momentum train, and it was amazing what they were accomplishing beyond that $300. So, guys, that's my first hour. I mean, every day, same darn thing, broken record. So I'm going to flood the room right now. There's the spreadsheet once again. Fill it out, study it, commit to using it every day. I'm also going to give you the Chart Reading 101. All of these are in PDF form, so everyone has access to it. This is also the daily goals, the one that shows you if all I can do is $100 a day, I'm still making 25 grand a year. This is the exit conditions. If I'm in this trade, what does it take to get me out? You'll have to create your own plan for that. There's the high probability trend trade checklist. There's the KISS plan. And then there's also the one called Order of Picks. And the Order of Picks is actually the PowerPoint that I use every day to teach this class. So you have every picture that I show in PDF form. Are there any questions before we take this first break? Are there any questions about momentum, about clear path, about entry areas? Is there anything I can do to help clear up misconceptions before we go into the second and third hour and start looking at y'all's amazing pictures and giving you feedback? Appreciate that, JK. I love what I do. And Steve, after annotating charts and saving and Snagit, delete all annotations. Yeah, so Steve, every time you put an annotation on your chart, it creates a layer. The more layers you create, the more opportunities there are for crashes. And Steve, Diego, that's one of the reasons that, man, I've got so much stuff open here. That's one of the reasons that I take my pictures with no annotations and then I go back and annotate it. And the cool thing is I can even come back and go through and annotate later, right? I can take my pictures, but then I can get my head back into my trade. I can say, whoa, I'm still managing. Let me not worry about it. But when I take a trade, I'll show you. Just for grins. Was that the one? No. When I take a trade, I typically take like 1, 2, 3, 4, 5, 6, 7. I typically get maybe 6 or 7 pictures per trade, guys. And I think that this is a pretty good habit. If you take a pre-trade picture, what you're doing is you're saying, hey, are my rules met, right? Do I have the advantages I need? So I can come back if I think I'm about to take a trade. This is my pre-trade picture, and I can say, uh-oh, I don't have momentum. Egads, I don't have a clear path. Why the hell am I looking for a trade? And if I take a trade anyway, well, then I can come back and say, all right, this is probably where my analysis went wrong. I can present it in the room and get that feedback. And then I take a trade or a picture right at entry because I want to make sure that nothing changed when I took that entry. I want to make sure that maybe I didn't get married to a long trade all the way down here. So I'll take an entry picture. And then I'll take a middle of the trade picture because I'm working on management. I want to be able to squeeze the most out of each and every trade. And I can look mid and say, okay, I've still got every advantage. And then, guys, I take a picture of my exit. And my exit is where I put it all together. Was there a reason to exit? Was there a reason to get out of that trade? Or could I have held for more? David, one of the most successful Nexgen traders, told you he takes 3 picks before, during, and after. I do too. All the time, guys. I take so many stinking pictures. This library is about a year old, I think, and I've got 5,100 pictures in it. My other Snagit on my laptop has almost 10,000, maybe 11,000 on it. I take so many pictures. What is today? Today is the 10th. There's my first picture from the 9th. So what is that? 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 54, 60 pictures since yesterday morning, guys. 60 pictures since yesterday morning. I'm studying new stuff. I'm taking Janesh's class and I'm learning how to do what he does. And I am taking so many stinking pictures. And I'll tell you what, each and every one of them are paying dividends. So remember, the easiest way to get to where you want to be. Oh, hell yeah, Steve. So watch this. Do you have Snagit or do you have Capture software? Thank you for asking that. Guys, if you downloaded the software, you have Capture software. It's on there. Search it. You'll find it. So, Steve, if I take the picture, Capture software, if I hover over one chart, I just get the one chart. Remember, we're 2 chart traders, right? So I'm going to hover from the top left to the bottom right. I'm going to get both of my charts, large chart and small chart, and then I'm going to release the mouse, and it's going to say, hey, let's capture an image. And so, Steve, here's your picture, right? Up top, we've got arrows, we've got call out, we've got shapes. So watch this. I can left click and drag. I can create a little box, I can create a big box, I can create a huge box. But I'm going to do this one right here, and I'm going to put it right around that divergence high. I'm going to take an arrow, and I'm going to left click, and I'm going to drag it over, and this arrow is going to point right at that area. And then with the call out, I'm going to left click, and I'm going to drag and create a box, and I'm going to say, this is a term. Price reached, triggers below, calm it, Novak. Oh, if you want to save it for later annotations, I'm not sure that you can do it with capture, Steve. So I can upload it, and then that gives me the link that I can put in my spreadsheet and come back and annotate it. Let me continue editing. What if I hit save? I guess I can put it in someplace and then reopen it and maybe come back and annotate it. Guys, one thing, if you're doing this and you're doing this because you want to do this forever, I don't get paid by Snagit. I think Snagit, trying to annotate, yeah, is planning for the crash. So Snagit, Steve, is I think $63. It's a supersize at McDonald's with a McFlurry at the end. But what Snagit does for you is not only does it give you your most recent, it also puts them into a library, and I can open any one of these. So watch this. I'll scroll all the way down, and I'll open something from May. Oop, there we go. Didn't know what it was. But now I can still annotate and come back and do this all day long. Snagit has all the bells and whistles, guys. Snagit is the one that makes it easier. Snagit's also the one, check this out, that I can capture both of these screens with Snagit. And let's say that I want to make sure that my rules were met. And I want to do this on every one that I do. I can open up my KISS plan. And I can also use Snagit to take a picture of my checklist. And then check this out. I can drop my checklist right on the chart. And I can really compare and go through and make sure that I'm doing things right. So, Steve, I'm sorry, I don't know how to do it with capture to come back and annotate. So when the trade's over, you have to annotate, I suppose. Somebody may have the answer. I don't, I'm afraid. But I'm a big fan of Snagit because it allows me to come back and always do something different. Sorry about that, Pete. All right, guys, that's my first hour. I'm going to go take a break. I'm going to stand up. I don't know. I might go eat a pork rind or something. Who knows? When I come back, we're going to start clicking on the pictures that you guys have posted. Just a little heads up, and I want to share this with you guys. I am really chatty today. Guys, the class is designed to teach you 3 rules. The class is designed to have you seeing these things. The class is designed to keep you focused on the best of the best, and that's not the one that I wanted to share with you. This is the one that I wanted to share with you guys. For you new users, I blanket with very conservative rules. I blanket you guys, and I say things like not having momentum is the end of the world, and termination conditions will steal your children, and not having an area inside of favorable large triggers is going to run off with your dog and your wife. And guys, the reality is that I do this because I want you new users to have the highest chance of success. I want you to stick it out. I want you to be with me, and I want you to become chart readers, because you're going to get to the point, like we talked with Jerry on those entries that aren't the perfect entries using confirmation. You're going to see other people trading in determination conditions because they're capable of adding up their advantages. Get the process down. Question everything. Post everything. And know that this blanket making you wait all the time for a trade thing, it does not last long. The more study you put into becoming a chart reader, the quicker you're going to break out of that mold, and the quicker you're going to find opportunities to catch trades. And I would be willing to say that Ron probably got paid somewhere right here with momentum and a clear path. And then if I open up his chart, son of a gun, he sure did. If you guys don't think I'm going to recognize the patterns in you, you're mistaken. And Ron just said it. When you know the high probability trend trade by heart, you are going to see other trades. You're going to see other opportunities. But learn the basics first, guys. So I'm going to go walk a lap. I'll see you guys in 5 minutes. Go stretch your legs. Get away from your computer. Smile. Back in a minute. So I'm going to scroll up to the very top of the room and I'm going to start looking at the charts that are posted, guys. And I do this every day. This is one of the biggest things about Nexgen is you will get feedback every day. Everything you do, the only thing you have to do is post in the room. And I promise you, I'm going to tell you what I see as long as you tell me what you see. So each and every time you post a chart, guys, I want you to talk about those three magical things. I want you to talk about the momentum on the chart. I want you to talk about whether or not you had a clear path, and I would love for you to show me where you entered and where you exited, because there's a lot of information that comes in from all of this stuff. So Andy got us going, and Andy says to all of us, check it out, Mark. There's one of those strong bottoms, one of those termination conditions that reverses the market. And he had that odds favorable momentum, that first thing that we look for all the time. And he identifies this as an area with the potential to break, but it hasn't broken yet. And actually, Andy, I think by the time it came to the entry, you were just about the clear path. There's a reversal bar, there's a pullback, and there's an entry right at the area inside of favorable large triggers. Stop in the correct spot, and he rides that thing up. And that is a, let's see, that's 82 to about 02. So that's 20 points. That's a $400 trade in the NASDAQ right there, guys, using the exact same pattern that we teach every day. Ron came in behind and he said, Mark, I want you to just tell the class that when you understand momentum, when you can identify a clear path, sometimes you don't even have to wait for a pullback. You're going to find a way to make money. And guys, he just jumps in with momentum on both charts and gets out of trouble. And this is what we call a base hit. That's a $100 trade. 4 of those a day puts you at over 6 figures, guys. It's pretty outstanding. And now we have the Pete Show. Pete gave me 3 of them. I love it when he does that. No, Ron, I have not heard anything about John yet. Oh, right on, JK. Tell him I said hello. One of the I've reached out to him. I've sent him a message. I've also reached out to his kid, Chris. I'm about to reach out to Melinda. I don't know if their cell phone's working in Sarasota, and I'm pretty sure all of Sarasota doesn't have power. And he may be working his way back towards his house to see if he still has a house. So as soon as I hear something, I promise I'll update. All right, so here's Pete, and Pete says, check it out, Mark. Odds favorable momentum, everything says up. I'm not completely sure that I want to get in at the area inside of favorable large triggers because I want to get in above the fib. And Pete, you're confusing momentum with trend trade just a little bit. That's your best entry every time with this look. Getting in above the fib, that's more of a momentum trade kind of thing, but still beautiful and all the way up to trouble. What a great job. What a great day. Nicely done, Pete. Momentum and clear path, guys. Momentum and clear path. Market reverse down, separated 50-50, potential to break. And Pete says, even though I'm trading directly into a termination condition, with this much momentum, with nothing wrong on the small chart, there's an opportunity to make a couple bucks. Not high probability, guys. It's not a clear path at all on 2 fronts. But momentum, remember what I told you? It'll cover mistakes that new users make. Pete did this very strategically. He knew exactly what he was doing there. Nice trade, Pete. And then look how that support held. I love that he put respect fibs and termination conditions when he traded directly into the fib and termination condition. But guys, this is one of the great things about becoming a chart reader, about having seat time, about having repetition, is you'll begin to see times when you can break your rules a little bit, when you can take those chances because you're weighing out advantages. What's the old saying? Learn your rules like a scholar so that you can break them like an artist, right? So that's why we keep it very basic in the beginning. Make sure that you understand advantages. So if one of them goes away, you know that you have to manage it aggressively and you don't just hold on forever. Muser, when you capture an image, save it and click upload later. You can find the image in the upload queue, open it and annotate it. There you go, Steve Diego. Thanks, Muser. Muser used to post charts in my room. Now he just gives great capture advice. Thanks for that, man. I didn't know that. I'm going to have to try it once or twice so that I can teach it next time. Good stuff. All right. What's the next picture? Hey, look, there it is right there, guys. It's okay. We're all new. Steve Diego, let's see what you did. Everything says down. You let it clear the fib and you get in and you make $200. And then you miss the pullback on the entry for the potential to finish. I see you. For the potential to finish the move down to the fib. First potential target, second potential target. I suspect a little bit of smartassery in there, but I do like it. I do like the language. Why did Steve put potential? Because he doesn't know what's going to happen. But what he does know is that with odds favorable momentum and a clear path, that's the likely outcome. The potential is there, and that's all we're doing, guys. And you're absolutely right. That would have been a nice trade all the way down, Steve. Great picture. Good job, Mr. All Caps Potential. That's the stuff that makes me laugh. Josh says, best entry I could do. Like a freaking sniper. Odds favorable? Yes. Clear path? Yes. Perfect entry? Damn right, Josh. You guys remember when I said this morning that yesterday we had a conversation and Josh was going to show us the perfect entry today? That's it. If you don't think feedback is helpful, trust me, you'll start doing the right thing just to shut me up. Josh, this is absolutely beautiful. What a great looking trade. What a great looking trade. You know I'll never shut up though, right? Beautiful. Beautiful, beautiful. He probably learned it from his old man, Jerry. All right, let's see who's next. Miss Cindy from Miami. All right, Cindy, strong top, like it. Termination reverses the market. 50-50 look, which means that these areas have the potential to break, but they haven't quite broken. Yellow 1-to-1 to hold price, large and synthetic, two separate. And so, Cindy, I love this picture. One of the things that I want to annotate on it. And I think, were you in here for the lesson earlier? I hope so. And we'll just look at the small chart. Price could go here, right? And it could go here. Price could bounce here. It could bounce here. It could bounce here. And you said it. They're two separate. So what you're saying is you're like, wow. My large chart says it's a chance, but my small entry is kind of, we'll say, wonky. I believe tonto is the Spanish, right? So this is where you can say to yourself, where's my, I killed it. Hold on, we'll come back to it. This is where you can say to yourself, Cindy, you know what? This isn't the best entry. I've got too many options. It's not a clear path. Let me force this market to go in the direction of my trade. Let me absolutely insist on a reversal bar. Does that make sense? Yeah. It went up. So you had a 50-50, right? Potential to break. You had 1, 2, 3, 4 areas that you were hoping would break. And you really, that fib update got you. That you got a fib that started printing right there. Do you see it? This has gotten me before too. Technically, you traded directly into a termination condition, but that fib update made it hard to see. You kind of got bamboozled here. Do you see the fib right there? And there it is right there. But when you were taking this trade, you were so focused. I've done this before 100 times. Right at 10 a.m., you're going to get that update. But do you see how many areas you were hoping to break? And how not perfect this trade was? And how against you these small triggers were? I love a reversal bar here. I don't disagree with the look. I just think that a reversal bar, when it's not perfect, pays dividends. But it's a good read, and that stupid fib update got you. I have been victim to that fib update more than I care to admit. And it happens sometimes. But it's a good look. It's a nice trade. I think that little confirmation bar lesson from this morning is going to be very helpful for a lot of you guys. No angry faces. No angry faces. We are all happy. Nothing but happy in here, right? Ron, odds favorable, clear path. My plan says get paid. Base hits. Base hits. Nice. Consistency, the exact same thing he showed us earlier. All right, Miss Cindy, redemption trade. Odds favorable, strong triggers. You take the momentum trade that Nexgen teaches, and it goes all the way to the fib, and you're like, you know what? I don't believe that fibs can stop the market. I don't believe that a fib will ruin my good time. And it did. And then your exit, though, Cindy, Ninja took you out with the stop? Or it just closed you out? It says that it was closed. Oh, okay. Do you notice that you got closed out right at the mid-band inside of triggers? I mean, it's okay. It was an exit. 3 divergences, fib, reason. This is one of the things, and Cindy, this lesson isn't just for you. I know that you know this. One of the things that I say, oh, you closed it manually? Okay. One of the things that I say every day, if you will, is that you guys will understand where it is that the market's likely to go. You'll understand where these areas are that can create a bounce, where these areas are that can have a fight, where these areas are that can ruin your forward progress. And the difference between getting out at 90.75 and getting out at 85.25 is over $100. Charts were charging, so you got scared. And if you got scared, scared's an emotion, right? Which means that you're not following a plan. Which means you're hoping it does what you want it to. So one of the things you can do is get paid at the blue area. And Cindy, I'm going to let you in on a secret. I'm going to tell you something that I don't tell a lot of people. You're really good at this. There's no doubt in my mind you'll find the next entry. You can't see any chart, that's why you closed it. So it came down out of sight. Okay. Anytime your charts disappear, Cindy, and you're like, oh my gosh, it's going, make sure that you click that F, that F goes away, and you'll never lose your price. So sometimes I do it too. I squish my charts. Click that F, you will never lose your charts. It will always keep that bar. So watch this. If I get everything off screen and I click that F, boom, right back in, never out of view. But I'm going to turn this into a lesson for everybody else though. The difference between getting out at the fib and where your exit was $100. Let's say you do that once a day. Once a day you give back $100 for the entire year. That's $25,000 that you've donated to the other side of your trade. $25,000 over the course of the year. Isn't that amazing when you think about it? That's what a tax write-off. And this is why you guys will hear me say a lot, I always love your trades, and sometimes areas break. But I promise you, you'll get to a point where you're going to be glad that you got out at this line because you can wait for the next trade. If you hoped that this area would break, guys, it didn't. Right? How many times has that happened? I hope this area breaks. It didn't. There it did. Here it didn't. Here it didn't. There it didn't. Remember that these rules come to be because the rules are based on patterns that happen more often than they don't. And the idea of termination conditions, guys, the idea of termination conditions is that 60% of the time it works every time. More often than not, these lines stop the market or create an untradeable bounce, which is how rule number 2 came into place. Miss Jen, let's see what you did. Termination, odds favorable. Why did you wait for a reversal bar? Because of the 50-50? Cool. Because split triggers, because 50-50. Jen said, you know what? It's not perfect. Let me wait for confirmation. It got you in 2 bars after confirmation. And then look, the divergence prints again, and you said that you would have exited, right? But you had your target right down here at 66, right at the fib. And even with the crash, you were able to get paid with all that momentum. Nicely done. It can be. It certainly can be. You know, I've had one crash in like the last 3 weeks. Ever since I upgraded my computer. And I'm telling you, my new workspace has like 7 charts on it. I can't get this thing to crash. I like the confirmation. Did you use the sell stop? Jumping in? Right on. All right, that's it for pictures, guys. Do I have odds favorable momentum? My smalls are above, but they're different colors. My large aren't wide. What do you think? Do I have the best look for momentum? Nope. I agree. How about a clear path, guys? Do I have a clear path? Anybody? Price reached resistance. My triggers remain below. Cindy, you say I do have a clear path. Price reached resistance. All my triggers are below. This is a textbook termination condition. 100%. This is absolutely screaming to me, Mark, don't take the long trade. Yes, got it. Oh, I see what you did there. It is a termination. I got you. So it just doesn't matter what's going on over here, guys. I don't have a trade in crude oil right now. All right, S&P. Do I have odds favorable momentum? My smalls are below the large. But my large are green. And my small are green, but my background is red. What do you guys think? Do I have odds favorable momentum? Where are my new folks? I want you guys to give me these answers. Not a Rooney. That's a great answer. What about a clear path to the upside? Are all of my triggers above the fib? Or are they split? Are they 50-50? Do you guys see how without momentum, without a clear path, it's easier to do absolutely nothing? Whoa, I gotta refresh data. Guys, if your triggers ever look like that, reload your historical data. But look at the large chart. Directly into one-to-ones to the tick. No momentum. And look at the reaction. Directly into support with all the triggers above them. You're in a holding pattern, guys. Yeah, you could hit F5 as well. I like to reload. I don't know why. But either one, F5 will rerun your ninja script. Guys, I'm going to tell you right now, it's going to be a long class if you guys don't start asking questions and posting pictures. Because that's all the pictures. And we just did 3 charts worth of live data, and not one of them has a trade where the rules are met. What would you like to talk about? I'm going to sit here and sip a little hydrator. Got 4 tattoos to do today. I could go set up the studio. Make the market start moving. We'll post trades. That's fair. That's fair. Still at a termination. Let me show you guys. This is where I go when there's nothing going on. I go to MSN Games and I play blackjack. Gary, what did I do? I replaced the motherboard and the chip. And I think that's it. So I took out the old hard drive and motherboard, and my brother sent me just a crazy strong one. And it's awesome. I've got 0 problems. This thing is so fast. Do you guys want to play If Then? Probably, Gary. I don't know. Honestly, my brother said, here's the parts, put it together. And I'm mechanically inclined enough that that wasn't a problem. But I don't understand. I guess I could do this, right? Hold on. You can do system info. Let's find out. System. About. This is what I have. I have a 12th generation Intel Core i9 3.2 21.7 gigawatts, guys. My flux capacitor is cranking. I got 64 gigabytes. That's it. Windows 11 Pro. Nothing special. Just got a little giddy up. So let's play If Then, guys. And this is what I do. If trigger lines get above these areas with odds favorable momentum, then I'll look for a long trade. If the market reverses off of resistance and gives me rules met, I'll take a trade. If that doesn't happen, I'll sit on my hands and not give money away. Because honestly, guys, and I say this every day, look at that, 1, 2, 3 divergences in the same price range right off resistance. Go long. Not really. That would be financial suicide. And I think I say this every day. I probably say this every day. The difference between the most successful traders that I've ever met and the people that aren't finding the success that they wish they could have is the ability to do nothing. It's the ability to not take a trade when the rules aren't met. And if you've spent any time in this classroom, what you'll see is that there are a lot of ways to make money with the software. You just have to find your way. You have to find the charts that speak to you. You have to find the markets that you're comfortable with, that you can read quick enough to take trades. But most importantly, guys, more than anything, and I'm going to say it again because when you guys aren't posting, I'm a broken record, you have to know. You have to know what it's going to take to get you into a trade, and you have to know what it's going to take to get you out. And then once you know that, it's just rinse and repeat. Do the same thing every day. Every day until it's second nature. And then when your trade is so easy to catch that you don't have to think about it, add a trade. Nope. Oh, that's crude. Hold on. Josh, always easier to show me a picture, but no, I don't see gap theory anywhere. We hit an area, but the large triggers weren't a full bar away. We hit an area, but the large triggers weren't full bar away. There's your gap theory right there, right around 10 a.m., Josh. Price accelerates, reaches support. See how the large triggers don't follow? This would be the most recent gap theory. See how they were a full bar away? And then when you come to the live market, not a full bar away, just a termination. Yeah. And since they're not a full bar away, it's not there. It almost has the same look, but it's not quite. Good question. And for you guys that are wondering, what does Josh mean gap theory? And just, guys, brace yourself for it right now. Everything you post in the room, I'm going to turn into a lesson. Because I'm trying not to just ramble aimlessly. Guys, if price pulls away from the synthetic triggers, remember the synthetic triggers are the large triggers on the large chart. If price pulls away too fast and too far and smacks into a Fibonacci area, it typically snaps back. It closes that gap. It literally behaves as a vacuum. So when price accelerates and hits that key area, you're going to look at where your trigger lines are, your large triggers, in relationship to that reversal bar marker. And that reversal bar marker, it's either white or gold. And if you scroll over just a skosh, it'll give you the price. And guys, 58.2650 is the exact price that this bar becomes a reversal bar. So if you have room to make a complete bar before it hits the triggers, price is likely to close that gap, to really just suck back to those triggers. And any short trade you try to take is more likely to lose than win. So this is a good lesson, guys, and it's a pattern that you see a lot. And when you go to patterns here and you go to terminations, you'll see a lot of reference to that gap theory. And I think one of the best ways to study it is just open up a large chart and say, wow, look how price pulled back to the large triggers. Look how price pulled back to the large triggers. Dun, dun, dun. I mean, it pulls back almost always, right? But the gap theory is the one that says, don't take that trade yet. But remember when we said that in the beginning? Price loves to return to triggers. How many times can you see it in a day? You really start to believe it. After a while, there's your gap theory again, 100%. Straight into the mid-band support, large triggers don't follow. It closes the gap and the market continues up. Right into the mid-band, closes the gap to the triggers, and eventually the market does continue up. Look at all those pullbacks. Pow, pow, pow. Opportunity, opportunity, opportunity. There's your gap theory again, one more time. Gap theory is what tells you that your mid-band's behaving as a termination condition. Boom, 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 boom. Still a term. Look at the bounce. But Mark, I really want to go short. Look at this. I've got areas inside of triggers. But guys, you don't have momentum. You don't have a clear path. My father-in-law used to say, wish in one hand and poop in the other. Tell me which one fills up first. You NASDAQ traders, your small triggers are below that reversal bar marker. Jen, do you see that? Says don't jump in at the mid-band. It's not time yet, and it just closed the gap. And if I'm going to enter this trade, I need a reversal bar from right there. I never got it. Absolutely no trade. Pretty cool, right? There's the gap. Don't get into the mid band. It may close the gap. And then Cindy, do you see how the small triggers were so close? Wait for the reversal bar. Don't just jump in. Keeps you out of a lot of losers on the NASDAQ. That was a nice in the moment little lesson there. And Josh, that was that gap theory live. All right, guys, I'm going to go take a break. It may be longer than usual just because you guys aren't posting, and that's okay because that means that you're not breaking rules. So congratulations. If there's something that you want to talk about, make sure you let me know. I'd love to talk about anything at all, but I'll see you guys in just a few minutes. conditions, Batman. Look at that. Stopped it cold. Is anyone absolutely amazed at fibs yet? I hope so. There we go. It's trying to break. It's got the potential now, doesn't it? Guys, what do you want to talk about? Can you hear me? Did I turn on the microphone? I think I did. Okay, I wasn't sure. Sometimes I forget if I tap it on both. Good stuff. Good stuff. Hey, Sakshi! Welcome back. Long time no see. It's good to have you back. Guys, I'm going to start going through some stuff. No, Jerry, he's got 6 or 7 programmers working on it. All of his programmers do his programming as a side gig. He doesn't have a dedicated team of programmers. He just doesn't need it. So these guys are all doing programming for other companies as well as they do it. And there's a lot of moving parts. So no updates yet. About 4 weeks ago, he said it was probably going to be 8 to 10 weeks. But there's just no telling. It may be quicker, it may be slower. But one thing John has said 100 times over is he is completely committed to making sure that it's 100% perfect before he gives it to you guys. He's not going to rush the process because, I mean, nobody wants it done more than him. Trust me on this one. So he's going to make sure that it's solid. Gary says, I believe in termination conditions, especially when they're on multiple charts. And when I get all of those termination conditions, this white bar with my triggers rolled says, Gary, it's time to make money. Man, Gary, that's a good one. Very nice. Very nice. And guys, this is kind of next level. Once you get really good at termination conditions, well, you start believing in termination conditions and you start believing in their ability to turn the market. And guys, when a termination reverses the market, it's a strong top or bottom. That's the precursor for the best of the best. So right now we have the termination. We haven't reversed the market yet. The large triggers are still down. So it's not a strong bottom. I don't have odds favorable momentum because the colors on my trigger lines don't line up, and I really don't even have a clear path. So even though we had this great termination condition, we're still kind of holding off. If those large triggers go green, it's going to be a strong bottom. Let's see if it happens. Boom, strong bottom. And now I'm starting to get odds favorable momentum, but my plan says that I need those small triggers above this fib, so there's the potential to break. And once they get up here, guys, I'm going to start looking over here to see if there's an opportunity. That's kind of how the anticipation builds. Whew. All right. Price above large, strong triggers and small triggers separated from large with this small momentum. And trigger look, price has the potential to break and get to the next fib. Amen. So Steve over here says, you know what? Let me get above those one-to-ones rather than trading into them because look at the bounce they can create. Steve, brilliant. And then you get in on the momentum trade, right? And then there's your loss of momentum. And it comes right back to a mid-band right inside of the triggers. There's your trend trade. Momentum trades that fail typically become trend trades with this look. And everything goes up. And there you go, another little bobble right off the one-to-ones. And you're like, man, this thing is screaming. Let me bring it up. And then everything is still going up. It clears the fib, comes back up. And finally, it was moving so fast that it took you a second to get out. Steve, great trade. Did yesterday's lesson on the small triggers help at all? You had a little exit condition here maybe, and then a re-entry beautifully. So great stuff. And then annotating charts, but there's potential shorts on the move down. Absolutely, but if you just made $1,400, you're doing all right. Great trading, man. Guys, one of the things that's so much fun for me is I remember when you were new. I remember when you just started in my class. I remember when you struggled, and then when I see you guys come through, and just the confidence that I see in the trades that you take, and the management, and the not the I hope it goes up, but hey, with this look, there's the potential, and this is what I'm trading, and I love it. I get very proud, Papa, when that happens. Great work, Steve. Right up to a divergence high. Strong bottom, odds favorable, split triggers. If you took the reversal bar, you took that thing up. If you waited for it to clear, you took that thing up. And guys, it didn't change direction until it closed on the wrong side of the small triggers. That's a pretty good momentum run, wouldn't you say? Then once the area gets to the wrong side of the triggers, guys, it's funny how you just don't know where it's going to happen. NASDAQ moves about 100 times faster. I usually say 10, but lately it's been a lot more than that. NASDAQ's not the easiest market to trade until you're really sure what you're looking for. Termination, 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 termination. Who said rule number 2 wouldn't keep you out of trouble? I'm kind of bouncing around, Sakshi. So right now, this is the S&P. This is the NASDAQ. And this is crude oil. So I'll kind of go through all of them. Brand new users, the easiest is looking at crude oil and the S&P. They move slower. They flow very well. They give you time to go through the process. Been testing a NASDAQ trading plan. We'll ask questions about it when you get more stats on how much it works. Right on, Morgan. And Morgan, if you want, throw a picture or two in there and say, this is what I'm looking at. Or if you don't want to put it in the room because you're just testing, email it to me. I'm happy to give you feedback. I've got a little bit of experience. And guys, I'm always happy to help you. I'm always happy to walk through. When you send me a pattern, right, this is what I'm looking at. If I have any information on it, I'll share it with you. I'll be glad to. That's fun for me. I love to learn, guys. And when you guys show me what you're working on, sometimes you make me smarter, which is a good thing. It is 11:13 in the a.m. Good stuff. How many people in here are going to be taking Janesh and Safia's class? I know I've got a few. I guess I'll talk about that for a second. It's freaking amazing. I've been studying it for a day now. Yeah, me smarter, scary. Ron, we got to meet face to face one day. So you stop putting me on this pedestal. Gary, you're gonna enjoy it. It's really cool, and if you guys have watched, I think they put together a video or something for it. It's just Nexgen trades, but they talk a lot about psychology when they're doing it, and a lot of accountability, and addresses a lot of the things. Do I ever visit Phoenix? I haven't been in Phoenix, Jerry, since 1998. I lived there for a year. My son was born in Paradise Valley, right outside of Scottsdale. I like Phoenix, though. You were born in 98, Morgan? Oh, I know right where Cave Creek is. You live in Scottsdale? Love it. Morgan, my oldest son was born in 1998. And Pete's in Cave Creek. Jerry's in Scottsdale. I like it. It's fun when you get people in the same area. I had the good fortune of just taking a golfing outing with one of the gentlemen that's been with Nexgen for a long time here in Dallas. Nope, he is September, so you've got him by a couple months. I love doing that. I've got a gentleman that I'm going to go play golf with and talk charts with next week here in Dallas. It's cool to meet like-minded people, guys. Go grab a beer with each other if that's your thing. Go walk a trail. Go talk charts with somebody. It's kind of fun to hear other people's opinions, to see what other people are doing, because there's always something. Go fishing. There you go, Morgan. I fish at the grocery store. I'm not a big fisherman. I like offshore fishing. Not a huge fan of river fishing. Chicago burbs. Which side, Gary? My dad was from the south side. Lyons, Stickney area. We got the potential to break, but the entries aren't looking that great. Used to work commercial fishing. Right on, Gary. Morgan, how many fingers do you have? All of them. Good job. Glenview North. I've got a buddy. He did salmon fishing in Alaska for a season. And he said, you would be surprised how many people only have like 7 or 8 fingers that are in that industry. There's another termination condition. Man. So guys, right now we're just BSing, right? I'm going to go let my dog out real quick. You guys breathe deep for a second. Be right back. So guys, I was thinking of this analogy the other day, and I'm not very good at analogies, just so you know. But when I go to cross the street, when I go to cross the street at a crosswalk where there's the lights and everything, the one thing that I always make sure is that the hand isn't red. Like, that's what I'm actively looking for, is the don't walk. Why? Because I don't want to get run over, right? And even if I see the countdown, I start calculating my odds of making it to the other side. And I think trading's got to be a lot like that. You've got to not only focus on when it's okay to do what you need to do, but you've got to understand just as well when it's not okay to do what you do. And then Josh, this is S&P right now on yours. You don't have the fib. So Josh, one thing that you don't have, and it's you can't really see it on the picture. So see this fib right here at 58.20, and see how you have a fib right here. Notice that that fib isn't on your large chart. So do me a favor, take your large chart and squish it a little bit for me, because this is a 5-1 fib that's showing up on the large chart. You may not have it up here. And one of the things is I rebuild my charts all the time. I go back and forth all the time. What are you set to Eastern time frame, Josh? Okay. That may have something to do with it, but it doesn't look like you have synthetic fibs on here. So do me a favor, like look at a big view. See that 5-1 chart? You didn't, or this right here, you didn't have that one either. You had the 13.2, but I didn't see your 5-1. I didn't see your 5-1. I didn't see your 5-1. So it looks like you don't have synthetic fibs on your chart. And one of the things and one of the reasons, whoops, that we use, what did I do? That's crazy. And let me do my little spiel, and then tick data has to be checked. But guys, your large chart has fibs from the 5-1, it has fibs from the 21, and it has fibs from the 13. And all of these are equally important. And when they're missing, you miss a little bit of information there. I'm not sure how I did that. So the first thing that I do, Josh, is I right-click and go to Data Series and make sure that Tick Replay has a check next to it. Does yours have it? All right. So after you turn it on, click anywhere on your chart and hit F5. And that'll rerun the Ninja script. And let's see if that puts those synthetics on there. And Sakshi, I know that you're back and you're feeling new. Let me know if there's anything you need me to go over. Guys, new folks, my first hour is always on YouTube. And it's always rules. So if you are new, and you can see that as it's calculating, there we go, the synthetics typically come in last. Gary, waiting for triggers to roll, second divergence, 1-to-1s, no trade. What if it goes up though, Gary? Shouldn't you be waiting for these triggers to roll as well? Mid-bandit fib could be termination, or fib off in the distance could be a target. I do this a lot, and it's annoying. Trust me. Ask my wife. When people say, I'm just waiting for the short, my brain instantly goes, well, shit, wait for the long too, right? Wait for your rules to be met. Be open to the idea that you have no idea what's going to happen. And have an if-then for both sides of these 1-to-1s. Because right now, I've got every trigger above these areas. No, you're not in a channel. You're not in a channel. Let's go to the NASDAQ. That's not a channel. That's a tiny little retracement. Every trigger is still above the area. Don't define channels on your small chart. Gary, this is everything up. Above areas, absolutely no shorts. You're just in a holding pattern. Does that make sense? That's not a channel. Let me show you what a channel looks like. Boom, 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 boom. That's a channel. Boom, 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 boom. That's a channel. This is a retracement. Does that make sense? It's not a channel. No matter how much, I could go like this and go, oh my gosh. Look at that. That crap's going sideways. Man, that's impossible to trade. That is the flattest market I've ever seen. Or I could go, oh my gosh, look how steep it is. Right? So how do you define a channel? How do you define consolidation? I appreciate you, Gary. I do appreciate you. Support to resistance to support to resistance, right? Let Rule 2 define your channel. So on mine, Josh, I should be running 13.2 Renko bar chart. Oh, it did work? Man, I'm brilliant. Don't let small charts define your consolidation, guys. So Gary, you just inadvertently created a pretty good line. You had to fix the trading hours? Okay. Now I have to wait for mine to reload. And let me show you guys why you shouldn't let the small chart define a channel. You guys remember the talk on refinement? In this one bar, look at all of this movement. Wouldn't it be easy to convince yourself on single bars that life was over, that consolidation was imminent, that you're never going to get out of this range? One bar. Look at all of this. Guys, this is why the large chart leads the way. Large chart says up. Large chart says momentum. Large chart just says, I don't have a clear path. And we're just waiting. And Gary, exactly why I said don't get married to the shorts, right? All the triggers are above support. The rules of termination conditions say support is likely to hold. But this is the NASDAQ, so it's also likely to overrun, which is why we don't just go short for grins, but we're not going, or long for grins, but we're not going to go short, not with every trigger above. Does that make sense, Gary? And now look at your range chart. Screaming to the upside, right? Right off of support. And you had a white bar right off of that area. And you just had an HVA right there with momentum on the charts. I think it's pretty cool because the very basic lesson. Triggers, price reached support. Where are my triggers? They're above. Don't go short. It instantly takes short trades off the table. I don't have momentum. Might be too soon for a long for the new user. But look at how this is working out. Look at how the very basic language of rule number 2 kept you from getting married to a short. Right on, Gary. So one of the biggest things, Gary, that's going to keep you looking for that consistency is not forming opinions. Not forming opinions. Steve, let me see if I can do that for you. Let me go back to the opinion thing, guys. Have you ever been pulling out of a parking lot and a car is coming? Does anyone just pull out and go, they'll stop? Right? Of course not. You have to say to yourself, I have to wait until it's clear. I have to wait until I'm no longer in harm's way. And once you form an opinion, in California, yeah, well, you're in California, that's a different world. But I mean, you've got to, don't form opinions about what the market could do, right? What is it doing right now? Are my rules met right now? And I say this because I want to show you something. This is a good example right here. And then I'm going to go into the white bar trade a little bit for you, Steve. Everything is down. These one-to-ones should hold. Because price reached it and the triggers didn't break. So I take a long trade. And I'm like, well, but it's supposed to go up. So when it gets to the next area, I try it again. And I get run over. And when I get to the next area, I try it again and I get run over. When I get to the next area, I say, man, I'm not going to try it again. I just lost 3 times. So not only does taking the wrong trades maybe keep me out of a rules-based trade, there might have been one of those white bar trades, but the losses that I take here keep me out of any trades that may follow after, because at this point I'm hurt. And guys, the more you focus on really sticking to your plan and not forming opinions and what the market is doing right now, the easier it becomes. So, Steve, white bar trades. Guys, for you guys that are going to add the range chart eventually, and I'll tell you what, my brother teaches this probably better than I do. Everything starts with a termination condition. Everything has to be a no triggers through termination condition. Does that make sense, Steve? Because this is the part everybody screws up. There's your termination at 1036. Let's go back to 1036. And I think Gary caught this one beautifully, if I'm not mistaken. There's the termination again at 1036. So now I got termination conditions rocking out on 2 time frames. And then this chart requires a market flow chart. And we'll just turn that off so it looks easier. So I'm going to go back to 1036 on my market flow chart, and let's see if we can confirm chart stopping goodness all the way across the board. 1036, there it is again. So Steve, when I have a termination condition, price reaches the area, triggers aren't through. When it's confirmed on the small chart, reaches support, triggers aren't through. And then it happens on this chart. So one of the things the white bar trade is I get a white bar right off of that termination condition. But that's not the whole trade. I also have to have these little faster triggers pinch and roll to the upside. That's a big part of it as well. And then there's a pullback that comes back to these triggers, and that's typically your white bar trade, because what we're doing is we're anticipating this HVA line and we're looking for an opportunity to get in. Some people will get in right after the white bar. Some people will wait for the pullback to the triggers, and then they'll keep their stop. If I get 2 bars down, I won't be in the trade. And what this is kind of the first shot off of a bottom, because it doesn't always come back to an HVA line. So we go to the next termination condition. I want terminations all the way across the board, because Steve, what I'm doing is I'm anticipating a reversal. And doesn't it make sense to anticipate a reversal from a key Fibonacci area? So there's my term. Don't have one here, pivot stop out. There's my white bar, there's my triggers rolling. All you're doing is you're anticipating the HVA. This one would have been tough to catch. But everything starts on the large chart, and then you're looking for your opportunity based on this look right here on the small chart. Some people will just jump in if they get it. Some people will wait for the pullback to the small triggers. This probably would have been your entry right here. And what it does is it puts you in a position to take a shot at the direction change really close to that fib. And what are some of the most common problems? Well, people don't wait for a termination. You're welcome. So I'll see people right here try to catch a white bar trade and just get absolutely slaughtered into an area. I'll see people, and here's one of the biggest things. Notice how the triggers are weak and it worked out great. Notice how the triggers are weak and it worked out great. Don't fight strong triggers on the large chart. Don't fight strong triggers on the large chart. The white bar isn't magic. That white bar isn't going to magically give you a great trade. If this chart is screaming up, the retracement is very likely. You're welcome. So go back and study it, Steve, and see what you come up with. There was your termination with weak triggers. And look at this, right off of that termination, there's your white bar. So this happens a lot. And there it is right there as well. But it still comes up and retests. It's not a guaranteed winner, but it's a pretty cool trade. Takes a little bit of study. But with a little bit of study, it gets easier and easier every time. And then I'm sure you've watched this because you are my video guy. I'm in your head, Steve. There's your link. It does. It takes a lot of patience because you're going to try to trade every white bar you see. But there's this video, and guys, I'm going to say it again. I don't care what kind of trades you post in this room. I know the rules. I know the looks. We can talk about them. We can talk about what you did great. We can talk about what you didn't do so great. We can talk about whether or not your entry made sense. One of my favorite pictures. Oh, have fun without grass cutting. Guys, do you see how price reached resistance and then it came all the way back to mid-band and support and then it went all the way back up to resistance? Gary, I might consider this the beginning of a channel. I want to go to termination conditions real quick. When I tell you guys that we're just trading patterns, there's the same darn pattern. Same pattern. And it kept me from taking a short, even though it was a good top. And now we have to see what happens here. Is it going to continue up? Is it going to go down? And Gary's psychic, he knew that a channel was coming. Oh, thanks for that, Gary. So Steve, there's a little bit for you there from Gary showing the different rules going with it. Your Bible? My Bible. So how we doing? How we feeling? You newer folks, you guys that haven't been with me a long time, how are you doing? There's that potential to break. The first one didn't have divergence. That was a pretty good shot. And then divergence prints, and that might change the game. Anybody catch this one? Stupid termination conditions. There we go again. Is anyone a believer yet? And then I saw the term, do, 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 do. I'm a believer. I can't sing, by the way. Doesn't stop me from trying. No doubt in my mind. You've been stopped. Ooh. Alright, guys, you're making me silly. Making me silly. Let me see if I can find something smart to talk about. I like this one. Did any of you guys hang out over in Traders Chat? You ever see that guy with silly charts, Siva, that seems to always win? Siva's been with Nexgen for about 16 or 17 years now. And when he started learning, he knew that following rules was imperative. He knew that that was going to be the key to his success, guys. And he created this right here, and I'll give it to you. And this was rules breaking. And rather than just saying, broke my rules, what he did is he said, here's my penalty. So guys, missing a good entry. When you skip a good entry, when you talk yourself out of a rules-based entry, stand up and walk away for a minute. You're not thinking clearly. When you enter late, even though you should have been at the area, that's 2 minutes away from the market. Exiting for no reason. And guys, fear isn't a valid reason. Exiting because you're afraid to give it back. Exiting before you get to your target, guys. 3 minutes. Moving your stop arbitrarily to lock in profit. Middle of nowhere. Not in an area of price action. Not where the market shouldn't go. Go take a 5-minute recess. Think about what you did. Exiting late. Giving up most of the profit. We've seen that today, right? Refusing to get out of the fib. Instead of getting out of the fib, hoping the fib breaks, giving back $100, $200. That's 7 minutes. Trading against direction is 10. Trading against an area, 15. I think what this does is it kind of helps point out, not only are these common mistakes, guys, but this almost ranks the severity, how damaging they can be to your trading when you do it. So look that over. Enjoy it. For you guys that are new, this is the Mark Novak story. This is my autobiography. Or I guess it's just my biography as written by my brother. So your experience is directly proportionate to the time you spend, guys. And all of us start off and it looks like fun. Everyone in this room said, wow, Nexgen, Fibonacci, this looks awesome. And then you're in my classroom for an hour and you're like, this looks hard. How do I not know everything about everything in the first hour? I literally sent my wife that text yesterday after I did a one-on-one with Janesh learning this new stuff. I was like, I feel like an idiot. I can't believe I'm not good at this yet. I've taken 60 pictures in 2 days trying to get better, guys. I'm putting the work in, and I don't have any idea what I'm doing, but I'm going to keep doing it. And now I get it, right? I took an amazing trade that fit the rules this morning. I even got some praise. Did I miss? Oh, okay. I was like, did I miss them? I'd be happy to, JK. And guys, right about here at day 30 is when you're like, I'm going to get 20 prop firms account and I'm going to put my wife's diamond ring fund into the market, and you get absolutely blown out. And this is the I don't know shit stage. And this is where most of us that go live too soon end up. And this is where you start questioning, do I really want to be a day trader? Can I really do this? Is this possible? And I ask this a lot in the room. Has anyone other than me ever thought, you know what, I just might not be cut out for this? And then right about here, and I lost $5,000. That's why this is my story. I lost $5,000 in 2 hours. Like 21 trades, I had no idea what I did. Right here at the I don't know shit stage, guys, I have a message of hope and inspiration for you. This is where you either quit, and I don't want you to quit because I know this works, or you follow the path, guys. This is where you start participating. This is where you start taking pictures, where you start annotating, where every question that crosses your mind gets posted in this room. And when you do that, it makes sense. And when you do that, you begin to surprise yourself. And when you do that, you get to the I did it stage, guys. And being at the I did it stage is amazing. And it doesn't mean that you won't have days like this. But you can do it, and there's a path to get there. All right, JK. Let's look at it. Boom, 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 boom. So I like this. Do you mind if I annotate your charts? So this is my first arrow. And this is how you get the best feedback. So we'll just put OFM. I'm going to go all caps because I'm going to yell. So what do you think? JK, did you have the momentum that you need to feel good about it? All right, yes, the answer is yes. Cool. All right, so on the next one, after I established momentum, and you're absolutely right, it was a great look, JK, I asked myself about the path. Do I have a clear path? And remember, it can be a yes, it can be a no, or it can be that 50-50 potential. Which one did you have here? Can you tell by the trigger line location which of these you're looking at? Because when you understand what you're getting into, lets you know how aggressive you have to be on management. So this is going to be the 50-50 when we talk about a clear path. And what 50-50 means is that 50% of your triggers have made it beyond that area, but 50% of your triggers are lagging behind. And what the 50-50 means to me is that with odds favorable momentum, this fib has the potential to break. But it is not a clear path. Does that make sense? Because the only way it's ever a clear path is if both small and large get to the other side. Awesome. So let's do this. You take what is essentially a momentum style entry, right? And you say to yourself, with all this momentum, I sure hope it goes to here. And you just kind of jump in. Is that fair? That feels like a jump in trade, which is okay. Nexgen actually teaches a trade that gets you in at this fib. And this is a momentum style trade. So the one thing that happens here, and we talked a lot about this one yesterday. Momentum gets me in. I jump in, totally cool. Losing momentum is a great reason to exit. So what happens is once you get this close on the other side of the small triggers, you're losing momentum. You're no longer on the good side of it. This is a great exit. And you lose a couple ticks. And I want you to notice something. Look at where your stop is at. It's right before an area inside of triggers with odds favorable momentum and the potential to break. You actually exited right at your entry. And you said, wait a minute, this is a trend trade. This is good. Let me jump in. And it goes down from 65 all the way to 54. Which means on the KISS plan, what you did is you took a medium probability trade. You could have made $100 at that first target. And then when the market came up and it didn't break, whoops, break even on this trade would have been a fantastic thing. So what you did is you took a medium probability trade. The momentum trade failed. It turned into the trend trade, and this was your entry. Up here, waiting for the reversal bar is fine. It gives you that confirmation. You know where your stop goes. But you have to remember, and I'm just going to put a big box over all of this. Get bigger. And this is why I talk about rules so much. Knowing what up against. Potential not clear says get paid. Don't hope for the home run. Does that make sense, JK? I love it. Your read is outstanding. Your first little look at it with that potential momentum, trying to ride it out, is beautiful. And one of the things that we talked about this a lot yesterday, notice how the market continues down all the way until you get a close on the other side of these small triggers. This is a great visual cue to say my momentum is gone. Let me exit this trade and I'll wait for the next one. Great job on this one. Great large chart read. I like it. Any other questions about that I can help with? Was there something that I didn't cover there? Look at that termination again. I love the way you did it, man. Great, great, great. And I'm telling you, you'll get to the point to where your brain starts putting all these things together fast. And that's the repetition. The more pictures you take, and then JK, the more you write on your charts. And I know that it seems like a pain in the butt. But if you write on your charts about the momentum and the path and the entry areas, you almost can't mess it up anymore. Because you'll be talking yourself through it. And it's a pretty awesome when that happens, when it all comes together. And it feels good when it clicks. And there's a lot of you in this room that have had it click. And it's awesome when you catch that trade and you're like, whoa, I did it. I've been watching other people do it, and I just did it. Now let me repeat it. So, good stuff, JK. I'm not worried about you. You got this. I got this. I have to see if Nexgen will have a hurricane special for you guys that need software. That'd be awesome. And every salesman just got the heebie-jeebies that I said that. Nope, I refuse to worry. I taught my wife to read indicators. If I piss you off, you won't withhold sex. So we're good. I probably shouldn't say that in the room. Right now, HR, if we had an HR department, I would have been fired 100 times over. Sorry, guys. Trading doesn't have to be this big, serious thing, right? Let's learn some rules. Let's follow a plan. Look at that. Directly into support. But Mark, there was a mid-band right at those triggers. But dude, terminations. Terminations. Saving our bacon day after day after day. Whew. Man. I'm going to do one less cup of coffee tomorrow for sure. That got a little silly, didn't it, this morning? Sorry about that. Haji, how you been? Good to see you in here. I love it when I see you guys coming back after a while. Daniel613 is hanging out. Dionysus is back in here. I'll go trader. So one thing that I say is when I start seeing names come back that I haven't seen in a while, it means one of two things. The first thing, and probably the most obvious answer, is that you have some sort of crush on me and you just want to be back in this room to be near me. And that's totally okay, guys. Embrace your feelings. The second possibility, probably less likely, is that maybe you need help with something. Maybe you're not where you want to be yet. It's okay to ask questions, guys, even if you're not new. You're going to go some chase. Golf day today, JK? Man, that's the beauty of what we do. I went to the driving range yesterday. I wish it would have been 18 holes because I was on fire. I haven't hit the balls that well in a long time. So I'm going to try and play this weekend. I couldn't get a tee time yesterday where I wanted to, so I just went and played and practiced. Just like you guys should, right? If you want to get good at something, you got to practice. I'm a horrible golfer, though, JK. I don't want it to sound like I'm a good golfer. I am a 90 to 95 every time. 78 is amazing. I've never been in the 70s. 83 is the best I got. And it was just one of those days where I could do nothing wrong. It was my best round of golf ever. And it was an 83 or an 84. So I'm not in the 70s yet. I will be. I will be. Man, you know what's funny is I did that yesterday. I've seen videos. I've never done it. I just try to hit it as straight as I can. And yesterday I did it. I aimed a little left and opened the face, and I was able to get the exact curve that I wanted on it, just not consistently. It was fun. All right, Andy Man. Don't aim left, see? I need to give you video or something for feedback. It's hard to explain it. Don't aim left, but leave it open? Or actually, you'd have to close it. I never know which is a draw and which is a fade. Aim right to set up a draw. So maybe it was a fade that I was hitting. But this is why I don't try to hit them, because I can't even define them. Momentum for days. Potential to break. 75.3, 75.3. Where was your entry? 74.76. So you're right at the beginning, Andy. Not even a 50-50. You haven't made it to trouble yet. You said everything rolled and is going up. Let me take a pullback to everything inside of triggers. What a great trade. And Andy, if you just would have hung on till you got a close on the wrong side of the triggers, that's a lot of money, isn't it? JK, I hope you have a great round today, brother. I'll see you tomorrow. Or sister, I'm not really sure. It's hard to tell with JK. You may have written Harry Potter. I don't know. Just using the one lot? Still could have helped. Goals met? I love it. John K. All right, right on. Sometimes I do that. I don't remember who it was. There was somebody in here that I was like, dude, man. They're like, I'm a girl. I was like, I'm so sorry. I can't see you guys. And I would never assume. Never assume your pronouns. I'll assume the hell out of your pronouns, guys. Just heads up. I guess that's it for today. I think we did it. I think we made it. The market wasn't giving it away, but man,